Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is for Tuesday, December 10th, 2013. We had kind of a lackadaisical day today. Gapped up across the board, but really didn't make a whole lot of progress, especially on the ES and in the Dow side of the market. So let's take a look at the current patterns and see what we have pattern-wise. Then we'll drill down and take a look at some of the levels, and then move on to the market internals as well. All right, so here's a look at the NQ side of the market, which was definitely the strongest on the day. Had kind of a sloppy day on Friday where we closed below the open, but did make a new high on the move. In the current session, we did make a new high on the move and also a new high close on the move. Not particularly impressive, just because we barely closed above the day's open, so we really didn't wind up making a whole lot of net progress on this move. But we did expand the range and make a new high close on the move and hold above the open. So for now, the pattern is still positive. Broad market side of the market, at least measured by the ES, was definitely not as positive as the ES. You can see that as the Nasdaq side of the market, that is, excuse me. The ES futures did make a new closing high on the move, just basically fractionally. But what we wound up doing was closing below the day's open. So even though we did gap up on the day, we didn't expand the range beyond the day's opening and actually closed below the day's opening, which is going to leave a contra sell signal on the chart. So we've got a kind of a stealth sell signal here, where we did make a new high in the move, but the market doesn't really have a whole lot to show for it, at least on a technical basis. All right, so here's a look at the ES futures on the chart with levels and also our seeker study. We have this contra sell signal up here, just below this key level. We did not make a new high by much on the move here, but we did make that new high close. So that's really the only positive technical here. We did, as we said before, close below the day's open, and we do have a 13 exhaustion warning in place as of Friday's close. So to the upside, this little double top is going to be the key level at 1812.50. Above that, if we push up above that, the risk level from the signal will come into play at 1827, 1828. To the downside, the big level is going to be the 10 EMA. The 10 EMA is going to have extra importance right now because we have that seeker exhaustion warning in place. If we close and follow through below the 10 EMA, we will flip the chart to short-term negative, and that would be the first time since October that we've had that condition present in the market. Now taking a look at the Nasdaq side of the market, the NQs did push a little bit higher. We did not break the risk level, so the risk level from the seeker exhaustion warning, that's the 13 with a red arrow above it, is still in play. The risk level is residing about 35.18.5, so that's going to be a very, very important level that a lot of traders will not have at their disposal. So make sure you have that level denoted on your charts. To the downside, key levels are going to be the 10 EMA, because the break below that, just like the ES side, will turn the chart to short-term negative. If for some reason the signal fails and we do continue to the upside, the plus 2/8 level at 35.94 area is going to be in play, and that's going to be very, very formidable resistance if that does come into play, especially considering the extension that we've had since that little October bobble and that October pivot. And here's a look at the 10-day trend. The 10-day trend is still pretty much in the neutral area, hovering around that one level. So we don't have an overbought condition, at least according to the trend in the market. So that's definitely one little positive for the bulls, that they may be able to wiggle this thing up a little bit more and keep this going before we get that reading. It's always better if you can get that overbought reading at 0.85 that coincides with the 13 exhaustion, but they're really not that far apart. We did tag the 0.85 level just a week ago. Now, as far as the intermarkets go, the SOX NDX cross, the NDX S&P cross is still gaming that the top of the regression channel. So until we get a breakout above that, we really don't break free from this this pattern that we're in. I'm going to switch up to the weekly time frame just so you can evaluate it. So we're right up into that area, but really haven't exceeded it yet. So definitely positive activity, but still potential real resistance point in the market here, at least in the NDX relative strength category. Here's a look at the oil services versus the oil futures. Oil services in red are starting to weaken here a little bit, but they really haven't broken trend. As you can see, this trend channel, 0.1, 0.2, and then 0.3, it's actually a little bit lower than this, are still in play and still intact. We have seen a recovery in oil to the upside here, and oil definitely has potential up to that 100 area to try and close this gap that was opened up. Keep in mind that oil tends to respond to prices in the OSX, not the other way around. So, as a lot of people think, the oil futures do not necessarily drive the bus. It's actually usually the other way around. So, continue to look at oil to continue higher and get kind of walk back up to that 100 area. Here's a look at the cumulative advanced decline line on the New York side. Still just kind of hovering here. Hasn't really been able to break out and support the new highs that the market is trying for. Nasdaq side's done a little bit of a better job in making higher highs here. Starting to see a little bit of a downside move here. Today the advanced declines were minus about 400 issues or so on the Nasdaq side, and they were flat on the New York side. So just need to keep an eye on the Nasdaq to see if that does start to lose more ground. But for now, we don't have any kind of a real divergence rolling down. The only divergence we really do have right now is that the broad market's trying to push out to new highs, but we're not really getting support from the cumulative advanced decline line. The bigger concern would be if the cumulative AD line started to roll to the downside, leaving prices higher. Right now we don't have that. Right now we just have a non-confirmation, if you will. Let's just take a look at some of the other keys. We talked about the NQs and the S&Ps having the exhaustion warnings in place. Let's just take a look at the ETFs now. The spiders, which are up in the chart now, recorded a 13 as well on Friday. So we do have the exhaustion warning in place on the spiders, and we're going to see that same condition present here in the Qs. We're 13 days up as well on Friday in the Qs. So not only do we have it in the futures themselves, but we also have it in the ETF derivatives as well. So this is pretty important. It doesn't always line up this way, but when it does, they're definitely notable developments, and that's definitely something that should figure into your mix going forward this week. So do not pass on anything that looks like a decent short setup, even though we're kind of bumping up against the end of the year. All right, so here's a look at the individual sectors ranked from best to worst. XAU is by far the top gun on the day, up about 2%. Definitely responding to the higher prices in gold, so do not overlook that. Perhaps the year-end selling for gold is done and the associated stocks. So we could see some more recoveries there, so definitely keep those on the radar. Airlines recovered decently, but they are in a sell condition on in the Seeker. So not that interested, really. They're probably just trying to trace out some sort of a top here. Transports were reasonably strong considering the overall performance of the broad market, which was decent, but the XOI was flat on the day, and the oil services was fairly negative in one of the weaker broad market sectors. So on balance between the two, not really what you wanted to see. You wanted to see them holding a little bit better. So really they were just kind of a push and basically canceled each other out. We want to really focus on those late cycle plays right now and want to see some strength there. BTK was also fairly sloppy today, even in the strength of the Nasdaq. So definitely don't pass on short setups in the BTK as well. Semiconductors are kind of middling here, not particularly strong, but neither were they grossly underperforming either. Here's a look at the XAL. Big gap up on the day, but closed fairly weakly. The risk line is still solidly in play. We gapped up essentially to the risk level off the Seeker exhaustion and really started to close the gap fairly aggressively. So keep an eye on these for some more downside. This is definitely a sign of trouble on this chart for the long term. Here are the stocks. stocks is going to wind up breaking the risk level today. But again, this is really just kind of looking for a pause here in the market because the 1 and the 13 from the seeker didn't have a whole lot of range. So we weren't looking for so much of a reversal as really just kind of a hold in the advance. Not making a whole lot of progress to the upside, but if this can hold above that risk level, which is going to be support now, would be important to the market. The BTK index was fairly sloppy today. It's probably in the process of retesting this area. Don't know whether it's going to be successful or whether it's going to be a retest and a failure. That remains to be seen. But certainly that's definitely going to be important to the overall NASDAQ. Oil Services Index, want to take a look at next, the OSX. Still using the static trend line here for support. If that holds, that'll be a good sign for the market and potentially something that we can pivot off of up to the upside here. We don't have a seeker exhaustion to grapple with, so we do pivot back to the upside, this 4/8 level, and then on an extended basis, even this static trend line could come into play. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.